Welcome to FY ET Now CEO's Roundtable. FICCI is celebrating 100 years, and we have the entire FICCI top leadership here for this roundtable here. So starting off with Anant, we just completed the first quarter earnings, and we began that with an assumption that there would be some kind of hit because of the West Asia crisis. But I think the markets are happy that there's not much of an impact. What is your initial assessment?
I think there was a big transition point October last year when GST 2.0 came in. And since then, we've seen fairly strong demand, particularly in some sectors such as automotive. Infrastructure itself has been a high area of investment by the government. So the entire value chain of infrastructure has seen good growth. So to that extent, we are seeing demand continuing to sustain despite the West Asia crisis. And that, I would say, is a positive surprise. The challenge, to a certain extent, is on the margin side. While in quarter one, there's been maybe still some positive surprise there, but I still think that all the commodity price increases still have to get passed on. And for some time, maybe another quarter, we can see some stress. But those risks are also waning away as commodities, crude has come down to about $80 today. So I still think that domestically we are fairly strong. There are the external risk factors still do prevail.
Vijay, you're linked to the crude market. How are you coping up with the kind of volatility which is coming in with respect to crude and crude derivatives and chemicals?
So the chemical sector has faced the brunt of the West Asia crisis in many ways, along with the fertilizer sector. There has been a very significant impact due to ships not being able to sail the Strait of Hormuz. Now we also have the Red Sea crisis looming. So in both cases, there has been a substantial impact. I would say the government and the RBI must be complimented for shielding much of Indian industry, the small-scale industry, medium, as also the consumers from the impact. But I would echo what Anand said, that the first quarter maybe there has been not as much of an impact. But I would certainly be a little bit more cautious in the second and third quarters. There could be some impact because the crisis has not blown over. There is definitely going to be an impact on higher pricing down the chain, and maybe potential second-order impacts on demand as well.
Mr. Panda, the metal sector, how is that coping up? If you look at some of the earnings which have come in, it looks like they've been holding off and good realizations have come in. At least the commodity cycle is helping you guys.
Yes, absolutely, Sajit. The metals sector in general has been doing well. And the reason for it also has been while demand has been okay. I mean, I wouldn't say demand has been fantastic given all the uncertainty and everything else which is going on around the world. But this is a sector which has also seen a lot of underinvestment, over the last 7 or 8 years, starting with COVID. And keep in mind that, investments in this sector, even when the tap is turned on, which I believe it has, companies like us are investing significantly in increasing capacity. But it's easier said than done to bring new capacity online. But having said that, I think going ahead, I do echo what Anant mentioned, that while there will always be some sectors which are leaders and some sectors which are laggards, and I'm talking in terms of performance, but over a period of time, it tends to sort of, balance out. And I think going ahead with, hopefully some of the geopolitical uncertainty coming to a little bit of a resolution point, we will see more conviction in, in a sort of a more secular manner across various sectors of the economy.
Ms. Kidwai, you've seen good credit growth happening, 18% credit growth coming in. Do you see there's enough resilience in the economy with respect to absorbing the inflation impact? Ma'am, the mic.
I do believe what you're hearing here is that resilience is showing through in terms of sectors that are coming through. In the near term, I worry a little bit because at least some of the companies that I'm associated with, wearing my private equity hat, there are companies that are selling off inventories where the price points are still contained. And as they rebuild up inventories, and everyone was just hoping that the issues with crude and the Straits of Hormuz would sort out, we may begin to see that inflationary impact because new product is going to be priced more expensive than old product which sat in inventory. So if this price of crude can stay suppressed as it's sort of bouncing up and down, maybe we don't see that. So yes, inflation, I think, is a worry. And I do believe it's being closely watched by RBI, by government. And the shielding that has happened by government in terms of price of oil has also been very important, because at the individual retail level, we have not seen that impact. But so near-term issues. Longer term, there's been an opportunity, because the price of fossil fuel pushed everyone into looking at EVs. So you see the jump in EVs, the big push now into biofuels. So there are whole different industries. I mean, even the push in ethanol, as that debate continues. All of this is actually terrific for India in the long run. And the fear and our own vulnerabilities to fossil fuel are creating new business opportunities as well.
Mrs. Somani, your sector has been the worst hit, initially at least, and now it's, I think, back to normal as far as operations is concerned. If you remove Morbi, which is still 15% of that units are still shut, how is the sector coping up with the kind of energy crisis which is there?
So as you know, the ceramic sector is heavily dependent on gas, and that supplies were disrupted because of the war. They have subsequently now significantly improved. Morbi was particularly disrupted because they were particularly affected because they had switched to propane being cheaper, and they had disconnected supplies from the gas lines. The organized sector, the larger players were not affected because we were buying gas as usual from the sources like GAIL. So I think there was disruption, no doubt, but it's come back now. I think 75% of Morbi has started again. The larger players were in any case never disrupted. The demand has been good, and cost inflation has been there, but I think we have to live with that. As I understand, in spite of the war, let me say normalizing, the prices of gas are still about 25 to 30% higher than before the war started. There is a cost input on gas as well as some other materials, chemical additives, etc. They've all increased significantly in price. But depending on the strength of your brand, these are typically priced out, and frankly, the consumer pays for them over a period of time.
Mr. Kurakiwala, 2025 we had tariff issues coming in, then Section 301 investigation which was coming in for the pharma sector. How do you assess the future for pharma, especially with respect to export-oriented companies?
See, pharma, if you look at it across, is a very large export-oriented activity, especially in the United States and other parts of the world. And one doesn't see any challenge in the traditional generic pharma export taking place. However, the US generic market is going through a little bit of enormous price pressure because of Indian companies only being there. And literally everybody is there. We dominate that market. So there is going to be a price pressure there. The opportunities area would be more biological. And Indian companies are trying to go into biologicals. But I think in this case, China would be a challenge. In chemical pharmaceutical, so far it was not there. We had in a leadership position. But biological, China is today nearly at par with the US in terms of technology and innovation, both.
Mr. Gandhi, do you see that's a challenge for the industry, getting into the biologicals or the biosimilars market, which is more lucrative going forward?
Looking into the biologicals market, as far as India is concerned, it is headed towards becoming the hub of biologicals. I think whether you take veterinary biologicals, we manufacture veterinary vaccines. It's become a hub. There is a lot of talent over here which is available in India. And I think overall, India is well positioned to become the supplier of biologicals all across the world. There are a few challenges in towards manufacturing biologicals because certain raw materials, India is still dependent on the West to procure them. They may be very low in quantity that are required, but in biologicals, everything is extremely critical. So that's where currently the challenge is. Even during COVID time, 1 or 2 raw materials delayed the manufacture of the COVID vaccine. We had the technology, we had everything in India. But having said that, there is a lot of indigenization that is happening, and we are headed towards becoming reasonably self-sufficient as far as biologicals is concerned and be a good global supplier.
In association with the all-new YONO, power to every Indian.
What happens when the game changes? You keep moving. You keep slaying. Keep celebrating. And if they keep talking, keep them talking. Because no matter how far you've come, you keep walking.
India's healthcare sector is globally recognized for innovation, affordability, and accessibility. At the 9th edition of ET Edge Best Healthcare Brands 2026, industry leaders explored how the trust triangle of quality, accessibility, and patient-centric care is shaping the future of healthcare delivery. ET Edge Best Healthcare Brands 2026. The summit recognized organizations that are redefining healthcare through innovation, operational excellence, and a strong commitment to advancing patient care and industry standards. Watch the episode at these times, only on ET Now.
Anand, let's look at what's in store for the next 3 or 4 quarters. We started off this war saying that, it will get over in a month's time and it's going to be a little impact. But external headwinds continue to be there. While, first quarter numbers could be, something to cheer about. Do you think that that can be sustained if this West Asia crisis continues?
I think we'll have to be living with the uncertainty because we were hoping that things will get better soon. But certainly I'd say the positive is we didn't expect crude to come down to $70 when there was positive news either. So to that extent, even if crude stabilizes at 80, 85, price passing on is happening to a certain extent. So I think after quarter 3, margins will stabilize. Will there be uncertainty? I think there's enough external factors, whether it is uncertainty of rainfall and El Nino impact and other things. Currently, the most recent uncertainty that we are experiencing is that of container availability for exports. We are finding that exports, while demand is resilient, we are finding that we're just not able to export because a lot of the containers have gone from China to the US because of changes in duties that were going to happen between the two countries. And now the reverse containers are just not coming back. So I think we just have to be agile. I'd say internally, say in our company, we've created a concept of war rooms where you have a small team of 3 or 4 empowered CFO, CHRO, and COO kind of getting together and taking very quick decisions on procurement, on logistics, supply chain management, Forex, and all of that as well. So this is something which I'd say is part of life.
Ms. Kedwai, foreign flows, you look at that very closely from a private equity and from a foreign portfolio investor's point of view. Whole of last year, we've seen a lot of outflows coming in. Now it seems the selling is, stabilized a bit. But do you think the growth is good enough for foreign flows to come back?
So I was just looking at these numbers, and if I have this right, only 20% of our foreign flows are actually FDI. The rest is private equity. And private equity, much as I love it and work in it, is shorter term. By nature, 5 to 7 years, if you're lucky, and it's from the sovereign wealth funds, maybe 10 years. FDI is really what the country is seeking. And I think it is the space which we absolutely have to focus on. I see reasonable success in electronics. So clearly what that agenda government had, and if we can replicate the Suzuki model, where Maruti, when it got set up, had this huge bunch of auto ancillaries it encouraged. Can we pick industries in the same way and force the supply chain to Indianize over time so that we create that whole bank of what we get now, the auto ancillary sector, and what we are aiming to do in the electronic sector. So the FDI policy, I think, is also pragmatic now vis-a-vis China and FDI in that to enable Chinese companies to set up here in a form that is attractive to them, so whether 49% ownership works or not remains to be seen. And I say this because our dependencies are huge on China. We can't wish it away. So can we make them part of our own growth and expansion as against being the ones that come in with the cheaper equipment in particular? I think the whole area of capital equipment and import will remain an issue as long as we see China as a competitor and get reliant too much on a Western world, which is overpriced, and do not develop our own solutions therein.
So co-production in India, but I think Vijay will have an issue with the kind of dumping which is coming from China, right, for your industry?
Yeah, unfortunately, what we've seen in the last few years in many sectors is actually other countries making for India rather than we making in India. So what we strongly advocate in FICCI is making in India. Our 4 priority sectors, which Anant has championed, which is R&D, the supply chain resilience, technology and manufacturing and innovation is something built around Viksit Bharat, which needs make in India. Unfortunately, we are not seeing enough FDI, enough money coming in and investing on the ground. In fact, we have a different situation now, Sajid, where people actually, FDI that has come in, invested in assets on the ground, brands on the ground, have actually taken advantage of the very buoyant stock market and listed their subsidiaries and taken capital out, which is quite a strange situation. It doesn't happen in most other parts of the world where people list their subsidiaries. So we're seeing a situation where the buoyant stock market has actually led to a challenge for India. So we need, I guess, it needs some cost correction and thinking by the government. How do we get more investment on the ground? The one thing we have going for us is our long-term potential is amazing. No other country has this level of population and growth forecast for the next 100 years. How do we take advantage of that and make in India?
And Mr. Panda, are you also facing that challenge with respect to the kind of dumping coming from for the metal sector there?
In my particular sector, which is ferroalloys, no, we don't face that challenge. Fortunately, in fact, we are, it's a large foreign exchange earner. But I have a very strong view on dumping and where do you find that balance? Because life is all about finding balance, if you ask me. Because of course, there is you have to balance the end consumer's requirements versus that of the producing entity. And swaying in any direction too much is from a policymaker's perspective is not correct. So where is that defining? Where is that sort of a fulcrum on which I think one should balance it? I think it's plain and simple based on fair competition, because I completely sympathize with what Vijay made a point, which is that Indian industry today is confident, it's capable, it's world class. What you can't take on is unfair competition. So, as long as there is a level playing field, I think Indian industry, and FICCI has been advocating this for a long time, is ready to play on the front foot and face competitive challenges, but provided it's a level playing field and not unfair subsidies or things of that sort. But having said that, as I said, one has to find that, from a policymaker's perspective, to balance that between saying that, if there is a competitive edge that downstream industries can get in a manner which is legitimate and not due to unfair subsidies, then don't take that away. But be careful about, not, policies which result in core industries facing unfair challenges and struggling to keep up or struggling to invest, which will then come to bite you sooner rather than later.
Mr. Sobani, one of the key challenges for your sector was the supply chain, especially gas coming in. Do you think the industry has now learned a lesson of how to ensure that you have an alternate supply chain of gas and others coming in?
Actually, unfortunately, in this industry, there's no substitute for gas. The kilns, the furnaces that heat these products and bake them, can only work on gaseous fuels. So you have LPG and you have gas in whatever form. Rightly, the government of India cut off the supply of LPG and prioritized domestic consumers. And that's absolutely correct, because otherwise kitchens would not run. So we were left only with the supply of gas. And gas was disrupted to reasons beyond the control of our country and its government. So frankly, I think they managed it well. And now I think more supply chain has developed. There's a lot more gas coming from the US to offset the lack of gas coming in from LNG coming in from Qatar. I think it's, we have discovered another source of gas, and India has signed many contracts for significantly raising the supply of gas from the US. It costs a little bit more because of the extra freight, but I think it's worth the risk, and industry definitely has no problem paying for the extra cost because it prevents disruption to the industry. So we are go, no go. We either run or we don't run. In that case, cost is immaterial, frankly.
Mr. Gorakiwala, supply chain is something which pharma has, has done well with. Actually, after the COVID thing, you've been able to. Many of the companies, including yours, have been able to do a good supply chain management. What is the lesson that you have learned from there, and how has that come to help you in this crisis?
See, for pharma industry, there is a good industry in India of making bulk drugs, and also we import intermediate of bulk drugs mostly from China.
True.
And from that context, I think it has been reasonably stable situation. And that is sometimes government feels for strategic reason you should make some of those important bulk drugs in India. But I think what we are doing is we are barking the wrong tree. Because what we are doing really is creating considerable value-added product. You make the final product, you send the formulation, the value creation chain, it is very significant. So to invest in yesterday's technology or yesterday's idea is no good. So I think one should encourage more on the area of innovation and research. And I think our industry's differential would be research, because we succeeded in technology part of it. It's not pure generic, because there is a lot of technology, there are a lot of work done. Now I think we should move up the chain as an industry in terms of research in the higher end of technology, maybe new drugs like we have been doing and spent so much money. And I can tell you in our areas of research, antibiotics, where we are there, the big pharma had given up research when 2-3 decades earlier. That's why we entered. Today they are getting out of the business because it's not as big ticket item, as remunerative as it is. For us, it is very good. And therefore, one can build in these new areas. We have to find a niche in our industry. It's an industry with so many things you can do. And there are always vacant spots available. And that is where one has to creatively find niche, and we can become a very important players in times to come.
Okay, gentlemen and Ms. Kidwai, thank you very much for joining us on this CEO's Roundtable. Thank you.